continuing to buy even at higher and higher prices. But as I've argued in the past on your channel, it's not a question of gold rising, it's a question of fiat currencies led by the dollar falling. This is really why the central banks in Asia, and particularly the People's Bank of China, have been selling dollars. What do they sell dollars for? Euro? No way. Yen? No way. Sterling? No. In other words, they're selling for real money, which has no counterparty risk, and they recognize that as gold.
In today's episode, Alasdair Macleod, head of research at goldmoney.com, discusses how central banks from countries representing the majority of the world's population are moving away from holding U.S. dollars and other Western currencies. This trend is raising alarms about the future stability of these currencies. As these institutions offload their USD reserves, the impact could be significant, potentially leading to a sudden realization of the true state of the global economy. At the same time, gold prices have surged to new all-time highs. Countries like China are continuing to buy gold even at elevated prices, viewing it as a safer and more stable store of value compared to fiat currencies. Macleod highlights that this shift in preference underscores a growing distrust in the long-term value of traditional currencies and a stronger belief in the reliability of gold. Economic pressures are mounting globally. Higher interest rates driven by the need to curb inflation are straining financial systems. Governments are running large deficits, adding to the instability. For instance, the UK's recent election of a socialist government promises increased public spending, which could further exacerbate economic woes. Macleod notes that this combination of high debt and rising interest rates is creating a precarious financial environment. According to Macleod, the movement towards gold is not just a financial decision, but a strategic shift in response to a complex and unstable global landscape. Later on the show, we'll cover the latest news, but first, smash the subscribe button, turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
And so this is why everybody thinks they're buying gold, but in fact what they're doing is selling dollars. The conditions that are worrying the People's Bank and various other, particularly Asian central banks, is that they can see what's going on with these Western currencies, their fiat currencies, and the governments that issue them, or their central banks, but certainly the governments that are responsible for these currencies, are in debt traps. I mean, in the UK, we've just elected a left-wing socialist government, Labour Party, by a landslide. And they are committed to renationalizing the railways. They're committed to basically spending an awful lot of money, which they haven't got. They're assuming they can raise it from taxes. But already we see that, non-domiciles, in other words, these are the people who are going to be taxed from next year as if they, on their worldwide earnings, as if they were, actual residents and British nationals. If they live here, they're going to get taxed to hell and gone. So they're going away. Private equity are going away as well, because there's a special deal which allows private equity individuals in the private equity industry to pay a 20% tax as opposed to a 45% tax. That is pledged to be ended by the Labour Party, so they're going. So it's a question of the last one out, please turn off the lights. I mean, that's happening here. And we've got debt to GDP of around about 100%. It'll go rapidly up towards 110, 120%. France has just, by some abracadabra, managed to get a far left-wing socialist, communist socialist administration in control of the parliament. And that all in the name of keeping out Marine Le Pen and her right-wing party. And they're going to be spending like mad. I mean, the first thing they're talking about is reducing the retirement age which Macron tried to raise, and there were riots all over the place. So we're going to see riots in France again and all the rest of it. I mean, the whole thing is just crazy. So that's the euro. So sterling, no, don't want to touch that. Euro, no, don't want to touch that. If you look at the yen, as I look at it at the moment, as we're talking, it's 161.35 to the dollar, almost a new low, matching last week's low point, and that is going to go lower. Why? Because while the Bank of Japan is talking about, looking at the interest rate situation and maybe raising them a little bit, I mean, they're not going to raise them really. If there is any change in monetary policy, they'll probably raise it by 0.25% or something like that.
In today's news recap, gold and silver's high price recession. So China didn't buy any gold for its central bank reserves for the second month running in June, writes Adrian Ash at Bullion Vault. Chinese consumers have meanwhile vanished from the country's jewelry stores, and Indian households have also quit buying. Silver-backed ETF investment funds have grown less than 5% in size from last month's 4-year low, while gold ETFs ended June at their smallest mid-year size since 2019. After making out like bandits in 2021-22, retail gold investment dealers and mints are really struggling as high prices combine with high interest rates to crush Western demand for coins and small bars. The world's bullion markets this spring set new all-time gold price highs day after day and came within 1 cent of $2,450, while silver topped $32.50 for the first time since 2012, adding almost 45% in U.S. dollar terms inside 11 weeks of silver trading. Yes, that surge has burnt itself out. But silver ended last week with its highest Friday finish in London since the 11-year high it set in late May, down only 2.2% from that Friday's weekend peak. Gold, meanwhile, recorded its 5th highest ever Friday for U.S. and Euro investors. Even the British pound's clear relief at Labour winning a landslide UK election victory over the Conservatives still gave gold its 6th best weekend in history against sterling. Now we'll show you more clips of the latest interview, but first, smash the subscribe button, turn on notifications so you do not miss out our daily recaps.
And of course, there's the good old USA, with a debt to GDP of about 130%, and foreigners selling the dollars, as I just said, particularly the People's Bank, selling dollars. You've got the Japanese institutions selling dollars as well because they've got losses on their bond investments in US treasuries. So one way and another, there is a funding problem. So what does the Fed do about it? Lower interest rates? No, it's got to keep them up because it needs people to borrow yen, sell the yen, buy dollars, and pick up the carry trade. I mean, the carry trade at the moment is giving you a nice sort of 5% plus turn. As long as that continues, then it defers the funding problem of the good old US of A. So you can see that all is not well in the world. It's all very, very distorted. The idea, everybody's praying for lower interest rates because so much of the private sector is zombified. Without lower interest rates, government debt traps are being sprung. We need to get lower interest rates. But the reality of the situation is that interest rates are not about managing the economy. They're about reflecting the loss of purchasing power of a currency. So that's going to continue. And at the same time, because banks are trying to de-risk their balance sheets because they're very highly leveraged, what they're doing is they're raising rates against anyone who wants to borrow. That is assuming that they can be persuaded actually to extend any credit. So the idea that this is a time when interest rates should be falling and all the rest of it, I'm sure the banks hope that the central banks can muscle rates down because they've got loans out to customers who are basically zombies. And their business plans are just completely shot at these levels of interest rates because nobody expected them to come up here. But so that decay is a slow burning fuse, which means that businesses are going to just go progressively into worse and worse financial conditions, with them becoming insolvent and going bankrupt. This is not a sort of a happy time, but what we're looking at, I think, at the moment is this sort of situation of calm but strong, nasty undercurrents likely to sweep us out to our deaths, and by drowning at sea. I'm sorry, I'm mixing my metaphors a bit, but you can see where we're going. It's the undercurrents are actually really very, very nasty in the current situation. And then on top of that, of course, we've got the potential for war in the Middle East. That's increasing. I mean, I understand that an aircraft carrier group has been sent by the American Navy to the Eastern Mediterranean. Now, if that results in an attack on Hezbollah, then that's going to bring Iran into this situation, and that is very bad news. If that happens, this recent rapprochement between Iran and the other Gulf states, particularly Saudi Arabia, will go on the back burner, because as far as Iran is concerned, they will then shut the Straits of Hormuz, and they wouldn't care too much about who gets hurt in that, because they are looking to protect their own interests, not the interests of the whole Arab world. So this is a difficult time, I think, geopolitically, certainly in the Middle East. That could blow up any moment. And on top of that, of course, there's the Ukrainian situation, and it is clear that we're not winning on our side. We're not winning this proxy war. And it's interesting to see that Viktor Orban has taken the initiative as president of the European Council to go and talk to President Putin. He also went to talk to Zelensky. Now, we don't know the details of the conversation, but I'm pretty sure that what he said to Zelensky is, look, this is just complete lunacy. Are you really seriously prepared to stand by and watch your citizens being killed to satisfy the Americans? Which is really what the situation is.
What do you think of Macleod's take? Do you agree with him? Will gold and silver plummet as China has stopped buying it? Are you scared of a massive meltdown? Post in the comments section your honest opinion and share your price prediction for gold and silver prices. Send this episode to a gold bug. Subscribe if you have not yet done so. And make sure you check this video right here because it's a perfect fit for you. I see you on the other side.